Charleston, South Carolina has been a big-time apartment construction center in this economic cycle. Today, on Apartment Market Dynamics from MPF Research, we'll take a look at the metro's general growth pattern, and we'll check in on the apartment performance stats specifically. I'm Greg Willett, and joining me today is Cameron McIntosh. Cameron, give us some perspective on the building volumes that have been seen lately in Charleston.
Since the beginning of 2010, about 9,300 new apartments have come on stream in Charleston. Those additions have grown the total inventory by 22% to a current total of roughly 51,900 units. Quite a bit more product is on the way. Projects totaling 3,963 units are under construction. Those completions will grow the stock another 7.6%.
How has Charleston been able to handle all this new supply? As usual, the answer is that lots of jobs have been created, stimulating household formation. In this case, a booming port and additions in both aircraft and auto manufacturing are grabbing the headlines. With the job count increasing about 3% annually over the past few years, total demand for apartments in this economic cycle has reached some 12,000 units. That's well over the 9,300 or so apartments completed.
With demand topping supply of late, Charleston's apartment occupancy rate is impressive. The current figure is 96.5%, right in line with the metro's all-time record. Virtually all the vacancies are in brand new completions still moving through the initial lease-up. The existing product base is essentially full.
We've set up a story that points to opportunity for strong rent growth, and the results here don't disappoint. Today's effective rents for new resident leases are up 5.7% from year-ago levels. Class B and Class C communities are registering annual rent growth of around 6 to 7%. For top-tier communities, the annual rent growth level is 3.3%. That's somewhat slower than the overall volume due to the amount of new supply that's in the initial lease-up process. But still, Class A rent growth near the 3% mark is a solid showing when there's so much construction activity.
The closest you can come to saying that there's any weakness in the Charleston rent growth story is to point out some inconsistency in the stats once you start slicing and dicing the data. In particular, the metrics are moving around for the top of the market product and the urban core. The really cool zone in Charleston is what we call the downtown Mount Pleasant Island submarkets. There are a lot of new apartments found in this area. The submarket has accounted for about half of the units delivered to date in this economic cycle, and nearly 2/3 of the metro's ongoing construction is in or adjacent to the urban core. Current annual rent growth for Class A projects in this hotspot is 1.8%. The figure has bounced around a bunch recently, moving from roughly 2% to 10%, influenced by how many units are in that initial lease-up phase at any given point in time.
Looking ahead, Charleston's apartment market outlook appears pretty healthy, but as in most places across the country, it seems unlikely that performance stats can hold at the especially strong levels seen right now. Expected occupancy runs between 95 and 96%, a solid showing, but not quite the rate posted currently.
Likewise, look for rent growth that's healthy but below today's pace. Annual growth near the 4% mark is expected for the next couple of years, compared to the current rate near 6%.
If you're considering investment in the apartment sector across the Carolinas, one thing to keep in mind is that the Charleston market is only about 1/3 the size of Charlotte or of Raleigh-Durham, and it's just half as big as Greensboro. That smaller size could make the area more vulnerable to performance fluctuation, but for now, the story certainly looks great. Thanks for joining us for our look at Charleston's apartment performance on Apartment Market Dynamics from MPF Research. I'm Greg Willett. He's Cameron McIntosh. Thanks for joining us. We'll see you again soon.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.